Hello, everyone, and welcome. It's great to have you all here with us today. Thank you so much for tuning in.
It's good to be here.
Today is Monday, January 19th, 2026, and we are doing a deep dive into the Q1 fiscal 26 earnings call for TRX Gold Corporation.
And, what a time to be talking about a gold company.
No kidding. The backdrop for this is just incredible. Gold prices recently hitting over, $4,600 an ounce?
Unbelievable. And that sets the stage for everything we're about to discuss with TRX. They just had a record-breaking quarter, really driven by their Buckreef Gold Project in Tanzania.
Right, and that's really the core question we're trying to answer today, isn't it? I mean, how much of the success is just the company riding this massive wave of high gold prices?
The whole rising tide lifts all boats thing.
Exactly. Or are they actually building a solid, sustainable business underneath it all? How much is luck and how much is execution?
I think that's the perfect way to frame it. So let's just jump into the numbers from their presentation. The CEO, Stephen Maloney, and the CFO, Michael Leonard, laid it all out.
Okay, so what were the headlines?
Well, record quarterly production, for one.
Yep.
They pulled about 6,600 ounces out of the ground.
And that led to record revenue, I saw, over $25 million.
Yep. But here's the number that really tells the story, for me at least. The gross profit margin is sitting at over 50%.
50% in mining. I mean, that's software company territory. That's not supposed to happen when you're digging rocks out of the ground.
It's wild. And it's all about the spread, They realized an average price of around $38.60 per ounce for the quarter.
And their costs were what?
Cash costs came in at roughly $1,500 an ounce.
Wow, so they're making a massive profit on every single ounce. And they reaffirmed their guidance, right, to keep those costs low for the full year?
They did, between $1,400 and $1,600. So, to answer your first question, yes, the high gold price is a huge help, but keeping your costs flat in this environment, that's pure execution.
Okay, so that brings us to their strategy. The COO, Richard Boffey, kept hammering this one phrase, self-funding.
Which is like the holy grail for a junior miner.
Right. Usually these companies are just constantly selling stock, diluting shareholders just to keep the lights on.
It's the dilution death spiral. TRX is trying to use that incredible 50% margin to pay for their own expansion over the next, 18 to 24 months?
So they're basically bootstrapping a gold mine.
Essentially, yeah. And the expansion itself is pretty clever. They're not just building bigger, they're building smarter. They're moving to a straight SAG mill circuit.
Okay, stop there. SAG mill. For anyone listening who isn't a metallurgist, break that down for us. Why is that a big deal?
Think of it like this. Before, they had a bunch of smaller, separate kitchen appliances doing the grinding. A SAG mill is like one giant, powerful food processor that does the whole job in one step.
So it simplifies everything. Fewer moving parts, fewer things to break.
You got it. It's all about efficiency. And speaking of which, they're also tweaking how fine they grind the rock.
I saw that. They're aiming for 20 microns instead of 15. Now, my first thought is, wouldn't you want to grind it finer to get more gold out?
You would think so, but there's a point of diminishing returns. Grinding rock into absolute dust takes a ton of energy, which costs a fortune.
Okay.
So, to make up for the slightly coarser grind, they're adding oxygen plants and these things called Aiken reactors.
Aiken reactors. Sounds like something from a sci-fi movie.
It's pretty cool, actually. It just injects pure oxygen into the slurry. The chemical reaction that extracts the gold needs oxygen to work effectively.
So more oxygen means a better reaction, even with coarser rock.
Precisely. You get the same, or even better, gold recovery for a lot less money spent on electricity. It's smart engineering.
Let's talk about what's in the ground. A great mill is useless if the rock is empty. They announced a huge drilling plan, 40 to 60,000 meters.
It's aggressive. And they're looking beyond their known zones, these places they call Anfield and Stanford Bridge.
Someone in the geology department is clearly a soccer fan.
Must be. But the really interesting part came from a new geophysics survey. It's like an MRI for the Earth, and it lit up with these deeper pyritic anomalies.
Okay, translate pyritic anomalies.
Pyrite is fool's gold. But in this kind of deposit, real gold often travels with it deep underground.
Yeah.
So finding these signals suggests the deposit has legs. It goes deep.
Which implies a much longer mine life.
Potentially, yeah. And there's another angle here with the reserves. You mentioned the gold price is over $4,600. That literally changes the math of the mine.
How so?
A reserve is only rock you can mine profitably. At a lower gold price, some low-grade rock is just waste. It costs too much to process.
But at $4,600.
That same rock suddenly becomes valuable ore. So TRX is redoing their pit designs. They'll probably increase their official reserves without even drilling a new hole.
It's like finding out the spare change in your couch is now worth 5 times as much.
That's a great way to put it.
Now, before we jump to the Q&A, we have to touch on the location. Tanzania. For a lot of investors, that carries a risk premium.
Sure, the jurisdictional risk. But the update from their SVP in Tanzania, Khalaf Rashid, was pretty positive. He said the post-election climate is normalizing.
And they're in talks with the government about their agreement, right?
Correct. They're working to convert an old 2011 joint venture into a modern framework. And to make sure that goes smoothly, they're bringing in the American and Canadian embassies.
Bringing in the heavy hitters for support.
Exactly. It shows they're not naive about the political landscape.
Okay, so that's the setup. Let's get to the Q&A. This is where analysts try to find the cracks in the story.
And they had some good questions.
First up was Heiko Eil from H.C. Wainwright. He went right after the operational side of things.
Eiko always does. He knows his stuff.
He asked about bottlenecks with the plant expansion.
Yeah.
And specifically about labor. Is your workforce going to balloon? And are wages going to kill your margins?
A very fair question.
Yeah.
But the company's response was interesting. They said, first, labor inflation in Tanzania itself is actually pretty low. And second, and this was the really key insight from Richard Bothy, the future underground mine is not going to be labor-intensive. It'll be a modern, mechanized, contractor-run operation.
Not some huge mine with thousands of workers.
Exactly. He threw out a number, like a max of 300 operators and 50 staff. Very lean, which insulates them from major wage inflation down the road.
Smart. Okay, Heiko wasn't done, though. He had a follow-up.
Yep, this one was on the geology.
He asked about the grade profile. Basically, does the rock get richer as they dig deeper, and are they going to smooth out the grades, or will we see some monster quarters?
And the answer ties back to that plant upgrade we talked about. They said, yes, the head grade is going to improve, and a big reason is a new pre-leach thickener they're installing in April.
Okay, another piece of jargon. Pre-leach thickener. What's that do?
All right, imagine you have a super thick milkshake. To get it up the straw, you might have to add some milk to thin it out.
Okay, I'm with you.
Right now, to get their high-grade sulfide ore to flow through the plant, they have to blend in low-grade oxide material. They're basically watering down their own milkshake just to process it. This new thickener solves that. It means they can stop adding the low-grade stuff and just run the really rich high-grade ore straight through.
And that means the average grade going into the mill goes up?
By about 5%, they estimated. That's just pure free margin.
That's a huge deal. Okay, question 3 came from a retail investor via text. 2 parts. They asked about the plant utilization increase and about the strip ratio.
Good technical questions. The utilization one had a really simple answer.
Which was?
Spare parts.
Boring is good in operations.
The best. They just said they're doing better preventative maintenance and keeping more spares on site. So when something breaks, it's an hour of downtime, not a week waiting for a part from Germany.
Makes sense. And the strip ratio, it's at 5.8 right now, which sounds high.
It does. But the CEO explained that at $4,600 gold, it is absolutely the right call to move more waste to get to the ore. It maximizes the project's total value.
So don't be scared by that number.
Not at these prices. He was very clear the life of mine strip ratio will be higher than 5-to-1.
Got it. Question 4 was another text question, this time about the tailings storage facility, or TSF. They were asking about the schedule and risk for building the next one.
Yeah, tailings are a huge deal in mining. You have to get it right. Their strategy is pretty methodical. They're doing a lift on their current facility first.
An expansion, basically.
Right. It buys them another quarter and a half of time. And that time allows them to build the big one, TSF3, properly.
So they're building a bridge to the final solution.
A bridge to what they say will be the life of mine facility. Build it once, build it right, and take that risk off the table for the future.
I like it. Okay, final question number 5. Another text, and this one was about the stock price. The investor basically asked, your operations are great, so what are you doing to get the market to notice?
And this is where the CEO, Stephen Maloney, got really passionate. He said, look, we've hired marketing firms, we're going to conferences, but he drew a really firm line in the sand.
On what?
On how they raise money, or rather, how they won't raise money. He said they refuse to do discounted private placements.
Explain what that means.
In this business, big institutions are used to getting a sweet deal. A company needs cash. So the fund says, okay, we'll give you $10 million, but we want to buy the stock at a 20% discount to where it's trading.
So they get an instant paper profit, and all the existing shareholders get diluted with cheap stock.
Exactly. TRX is saying, no, we're self-funding. We don't need your money. If you want to own our company, you buy the shares on the open market at the same price as everyone else.
That's a bold stance. It probably ticks off some of the big money players.
Oh, for sure. But it shows a huge commitment to protecting the long-term shareholders who are already on board. They aren't going to dilute you for a quick buck.
You have to respect that. So let's wrap this up. If you had to distill this whole call down to its essence, what are the core themes?
I think there are three. First, you have financial robustness. Record numbers, sure. But the real story is that self-funding model. They're in control of their own destiny.
Not beholden to the markets for cash.
Exactly. Second is technical optimization. This isn't just a brute force mining operation. The SAG mill, the oxygen, the thickener. This is a team that is constantly tweaking and engineering to squeeze out more efficiency.
Moving from a startup to a mature operator.
That's it perfectly. And third, you just can't escape it, is the macro leverage. They are perfectly positioned for this high gold price environment, and they're using those windfall profits to invest right back into the ground to find more gold and extend the mine's life.
Turning today's high prices into tomorrow's longevity.
You got it.
A really fascinating story. A company that seems to be firing on all cylinders at exactly the right time.
Well, that's all the time we have. Thank you so much for watching and listening to this breakdown.
Always a pleasure. If you enjoyed this, please do us a favor and click that like button. Share it with someone who might find it interesting. And of course, subscribe so you don't miss our next one. Stay tuned, and we'll see you next time.